This is Pre-Market Pulse, powered by Zintch, a fast, clean read on the tone of the market before the opening bell. No hype, no noise, just the signals that matter. Here's how the market is setting up this morning.
Good morning, cobbers, and welcome to the Zintch.com Pre-Market Pulse for Tuesday, April 14, 2026. The numbers at 6:39 a.m. Eastern Time. Futures are mixed this morning, barely moving, which after yesterday's volatility feels almost peaceful. Dow Futures, 48,385.00. Down 40 points, down 0.08%. S&P 500 Futures, 6,930.25. Up 7.50, up 0.11%. Nasdaq Futures, 25,628.25. Up 84.75, up 0.33%. The Nasdaq is leading, which tells you where the money is flowing this morning. Back toward growth and tech, away from the defensive posture of the last 48 hours. For context, yesterday's session was remarkable. The S&P 500 closed at 6,886.24, up 1.01%, and in doing so, officially erased every single point of decline caused by the Iran war. The Dow gained 301 points, plus 0.62%. The market looked at a live naval blockade and said, "We've priced this in." Next, the Iran situation. Blockade active, but talks may resume. The U.S. military blockade of Iranian ports in the Strait of Hormuz went into effect at 10 a.m. Eastern Time yesterday. More than 15 U.S. warships are now positioned in the strait, blocking all maritime traffic entering or leaving Iranian ports while allowing non-Iranian vessels to transit. But here's what changed the mood. President Trump signaled openness to further talks with Iran. Pakistan, Egypt, and Turkey are reportedly continuing mediation efforts between Washington and Tehran. The market is now pricing in the possibility that the blockade is a pressure tactic, not a permanent escalation. That's a meaningful shift in sentiment from 24 hours ago. Oil is retreating. Brent crude has slipped back below $100, trading around $98 to $99 per barrel this morning. WTI is near $97 to $98. That's a notable pullback from yesterday's $103 plus levels. The logic is straightforward. If talks resume, the blockade could be temporary. If the blockade is temporary, the supply squeeze is manageable. The oil market is trading the headline, and today's headline is less scary than yesterday's headline. That said, oil is still well above pre-conflict levels of around $70. The risk premium hasn't disappeared. It's just been dialed down a notch. Goldman beat, now it's JPMorgan's turn. Goldman Sachs reported Q1 earnings yesterday and beat across the board. EPS came in at $17.55, topping the $16.39 estimate by over 7%. Revenue hit $17.2 billion, up 14% year-over-year. Record quarters in banking and equities trading drove the results. The stock dipped slightly on a weak fixed income showing, but the headline numbers were strong. This morning, the earnings parade continues with the heavyweights. JPMorgan Chase already reported. Profit rose 13%, revenue of $49.8 billion topped the $49.13 billion estimate. Markets revenue surged 20%. Shares dipped 2.6% in pre-market despite the beat. Classic, sell the news, on a stock that's already up 21% year-to-date. Citigroup, reporting before the bell, consensus expects $2.64 EPS on $23.53 billion revenue. Wells Fargo, also reporting this morning. BlackRock, reporting before the bell. Bank earnings are telling us that volatility has been good for trading desks, even if the geopolitical backdrop is messy. Wall Street makes money when things move, and things have definitely been moving. Asia rallied overnight. Asian markets flipped green after yesterday's sell-off. Nikkei 225, up 2.4% to 57,877.39. A sharp reversal from Monday's 0.7% decline. Kospi jumped 2.7% to 5,967.75, briefly topping 6,000 intraday. Hang Seng, up 0.7% to 25,832.85. Shanghai Composite, up 1.0% to 4,026.63. Asia bought the dip. The renewed hope for Iran talks gave traders the excuse they needed to reverse Monday's losses. China's export data came in weaker than expected, but the geopolitical optimism overrode the economic data. Europe is green too. European markets opened higher this morning, tracking Asia's lead. The FTSE, DAX, and CAC are all in the green as oil's retreat eases pressure on energy-sensitive European economies. Travel and airline stocks are recovering after yesterday's beating. The dollar and bonds, The dollar is pulling back from yesterday's safe haven surge. With risk appetite returning, traders are rotating out of the greenback and back into risk assets. The 10-year Treasury yield is edging lower as bonds catch a bid from the improved sentiment. The read: this is a sentiment-driven morning. The blockade is still active, the warships are still there, and nothing has been resolved on paper. But the market has decided to trade the possibility of a deal rather than the reality of a blockade. Yesterday's S&P recovery, erasing the entire war-driven decline, was the market's way of saying it believes this ends at a negotiating table, not on a battlefield. Whether that bet is right remains to be seen. But this morning, the mood is cautiously optimistic. Futures are near flat, oil is below $100, bank earnings are strong, and Asia just had its best session in a week. The world chose to start Tuesday hopeful. That's the read. And that's your Zintch.com pre-market pulse for Tuesday, April 14, 2026. Good luck, and goodbye.